Good morning, ladies and gentlemen. It is September 14th, 2023, 8:45 a.m., and I am here live on the Market Open about 35 minutes earlier than I usually show up. I usually show up at 9:20. I'm here at 8:45 a.m. You know what? Basically, yesterday, we did the Market Open. We did it at 8:20. It was a little even earlier than today. And I loved it. I'm sorry, I just loved it. I loved it so much. The having the extra time to go through topics, get your thoughts out there, bring them into the world. Have people join, have the morning kind of slowly start and develop into the 9:30 Market Open. I honestly, man, I loved it. It was fun. It was exciting. It was interesting. I'm up. I woke up at 2:45 a.m. today. I've been starting to get up very early. I've been sleeping a lot earlier, so I'm up already in the morning. I'm consuming so much content, understanding so much about the world. It just makes sense to start earlier and give everybody the news. So I am very excited. I think I've pretty much decided. I said I would sleep on it, and I slept on it. I'm going to be starting earlier, and I'm very excited to start every day early, get through all the topics I want to get through, bring you. I hope what this becomes is a daily source for you to come in, get updates, get a little bit of entertainment, understand what's going on in the markets, and hopefully, even though I'm not the smartest investor in the world, my communication skills will be strong enough to condense the news that is being given to me, hopefully offer a well-informed opinion of that news, and then present it to you. And you have a better understanding of how to trade the markets, invest in the markets, do whatever you need to do, just be more updated around the world because you have a bit of input from me every morning. So I'm very excited to do this. This is going to be fun. This is going to be very exciting. And we're going to keep going. I did sleep at 9:30, so I don't want people to think I slept at like 1 a.m. I woke up at 2:45. I got my 5-6 hours of sleep, and now I'm here. And honestly, this is just, I love this shit, bro. I love it. I think of this as like a symphony that you're conducting in terms of how you can talk and conduct ideas and make it actionable so that people actually enjoy it and get value out of it. All of it's like it's a really, really fun game and passion for me, and that it's becoming. Plus, I'm a junkie. I'm a finance junkie. I'm a stock market junkie, and I just can't get enough of this. So let me just pull this up real quick. I'm going to add chapters throughout this entire morning stream so that when people come later, they can skip to the parts they like, because I know people love doing that. So let me just set this up right here. We've got a lot to talk about, a lot of breaking news. Let's start off, first of all, by giving a shout out to everyone who's here in the chat, and then we'll go from there. M. Russo, Joseph, Robert Sanchez, we got a great comment. When is AIPCon? It is today. I'll be live streaming that at 11:45 a.m. Miami Ren, Robert Sanchez, good morning from Denver. Clap cheeks. Good morning to you, Robert. Kane, Stefan, Brian C., Broccoli Brob, FR3, Gators, Hakoon, Sethi Roth, Jude, Markets Investing, Jason, Joseph, Amen, Simon, Robert, David, Matt, Michelle, Michelle Bernhardt, good morning. Good morning to you, Michelle. Nick Percy, thank you all for being here. Garcia, Stevie Sohn, TJ The Wheel, Deal, Imnop, love you all. Thank you all for being here. All right. Imnop is asking about PPI, so let's get right into the news at PPI. So PPI came in a little bit hotter than expected, not hot enough for the markets to be sad about it. So let me share my screen right here. This is what we got on the United States PPI. We increased 1.6% year over year, which is a little bit more than the 1.3% that the market expected. So there you go right there. And we increased 0.7% month over month versus expectations of 0.4%. So obviously not the best results, but definitely not the worst results. S&P was up pre-markets. This screenshot was taken right after these results came out, 448 right now. I'm looking at the screen. S&P is still 448 in the pre-market. So really the markets decided that this was actually a decent version of what they could expect from PPI. Now, for those that don't know what PPI is, it's basically the producer price index, which essentially means whatever a producer, which is a manufacturer of any type of product, has to create or has to pay for the raw goods and commodities to build that product. We want to see those prices going down, because if it costs you, I'm going to put random numbers out here, $5 to make a bottle of water, you're going to have to sell it for $6, right? So like if it takes you $3, you can sell it for $4. So the cost on the consumer, i.e. the consumer price index, the CPI that we saw yesterday, will go down if the producer price index goes down. And a healthy sign of inflation going down ultimately is the PPI coming down, so that consumers have to stop paying egregious prices, which I think, quite frankly, we would all argue they are pretty egregious. This is the official report from the Bureau of Labor Services. The producer price index for final demand increased 0.7% in August, seasonally adjusted after rising 0.4% in July. The index for final demand rose 1.6% for the 12 months ended in August. So let's get a little bit more details on why this happened. In August, 80% of the rise in final demand prices is attributable to a 2% jump in the index for final demand goods. Prices for final demand services advanced about 0.2%. So more goods than services that actually led to the increase in the producer price index. The index for the final demand, less foods, energy, and trade services increased 0.3% in August, the same as July. So basically, if you take out foods, energy, and trade, food and energy being, very big categories, you're flat from July, which is good. The problem is food and energy going up is, obviously not going to help when it comes to that situation. This really also is important because crude oil has topped $90 for the first time since November 2022. So Brent oil went to $90 a barrel. I think it was at 91, which is so interesting because in September 2022, the exact date as it was yesterday was also $90, went to a low of about 70 in March. Crude oil is now also $90 since November 2022. And that is contributing a lot from the energy perspective to CPI and PPI in terms of what we're seeing for these increases when it comes to inflation writ large. And so that's kind of a lot of what we're seeing right here in the context of why inflation is going up. Now, overall, does this really matter? No. And the reason it doesn't matter is because the market's ingesting it and saying, look, this is not some unique level of price increases that A, we didn't expect, or B, that is going to at all deter the Fed from not raising rates in the FOMC meeting or from not pausing. There is now a 97% chance, due to all the analysts, these fancy analysts that live in their high ivory towers that contribute to all these understandings of what the Fed is going to do or not, because they understand the Fed better than all of us. And their argument is that there's a 3% chance the Fed raises rates, 97% chance they're going to pause. They are factoring in a 40% chance that in November, the rate hike happens. And it's really interesting. The logic that I understood from this, from my research, is that the Fed wants to standardize and basically segregate the amount of rate hikes they're going to be doing. So if they actually do it in November, 25 basis points, which would put us at 5.5 for the Fed funds rate, it would be 12.5 points annualized versus like a lot more than that if they did it in September. So theoretically, there is like logic to still raising rates, but doing it at a later time. And the Fed is very strategic with that. If you remember, in June, we paused, and then July, we raised. And I naively thought, well, if we're pausing in June, then we're done. We're done. We're good. We stopped. If we stop texting, I'm not going to text you back. The Fed texted back, and they were like, no. Are you up? Because we got some more news for you. And so as a result of that, it is very it is misinformed to imagine that just because they're pausing doesn't mean there's not going to be a hike. Now, if October CPI comes in dramatically lower, there's a good chance they pause, but it has to really be dramatically lower for that to happen. And it's likely not going to happen, given what we're seeing in the markets. Frank says the Fed will crush oil prices over time with high interest rates. Economy will contract and then lower demand, which will lower prices over time. And, that's a good point. Ultimately, the Fed is going to cut rates when they feel there's something in the economy that might be breaking enough for them to trigger a reason to cut rates, unless we have this soft landing scenario where inflation comes down naturally. Unemployment is at this Goldilocks zone of not being at 5-6%, but maybe peaking at 4.2. We're at 3.8 right now. It's also really good for job openings to go down, which we saw in the month of August with the JOLTS report, because that means there's less competition for jobs, which means wages can go down. There's more competition for jobs, which means wages can go down. When there's a crap ton of people that can just get any job they want, they have more leverage from a labor perspective to be able to demand prices or to demand wages. And so that is good stuff we're seeing on the inflation angle, but to get it in that Goldilocks zone over the next couple months, we're going to be able to see if that ends up happening. So that's the update on PPI and kind of what we're seeing there. Again, pretty much a nothing burger. Everything was expected and the market reacted pretty handsomely to that. Let's move on to ARM. ARM IPO. Let's talk about that. That is really important to talk about. I've been learning a lot about this ARM IPO. So fun fact, I did not know we were IPOing today. I thought this IPO was like a month from now. And yesterday I was kind of confused why CNBC kept talking about the IPO. They like had segment after segment about ARM. I was like, damn, they must have nothing to talk about if they're talking about ARM. Isn't this shit like a month? And then I see a tweet last night that's like, it's tomorrow. And I was just like, wait a second. Oh. So that's why it's so important. So ARM is happening today at 9:30 a.m. We will see shares of this company go public on the United States Stock Exchange, the New York Stock Exchange, and we'll see what happens. So here's a couple of details about it, and then I have some more stuff that I want to share. SoftBank's ARM is going public today. The IPO was priced at $51, top of the $47 to $51 range. It's even funny because I got the price for this from the Wall Street Journal at like 5 p.m. yesterday, and I was like, oh, cool. ARM decided the price. Now we got to wait a month until we pay it. Naively not realizing if they decided the price, it's probably happening very soon, which is happening today. 95 million shares they're selling, raising $4.9 billion. They are only floating 9% of the shares in this IPO. So there's a 1.06 billion shares outstanding. For context, SoFi has about, I think, 959 million. Palantir obviously has about 2.18 billion. So ARM has 1.06 billion shares outstanding. They're selling 95 million. And that's how they're structuring this initial public offering. The interesting thing about this as well is that companies like Apple, TSM, Intel, even Google are planning to buy about 1 billion of the 5 billion they're raising, which means 4 billion is going to be left for the public, people like you and me, the schmucks like you and me that don't have access to all the elite ties when it comes to these IPOs. We can go on little old Robinhood or little old SoFi and buy our shares. And apparently the round is 10 times oversubscribed for the demand, which means I know a lot of people are expecting this IPO to like flop, but it might wait till it flops. It might double, or, maybe it's up 40%, 30%, whatever it's up today, and flop a little bit later when the market cools down. But at least in terms of the demand from either retail investment communities or institutional investors, people want this stock. And I think this IPO will be successful today. I could see it going from 51 to like 62, 63 and staying there for a bit and having some momentum before people decide to take profits on it. SoftBank. So for those that don't know who SoftBank is, okay, SoftBank is a conglomerate from Japan that raised $100 billion in their Vision Fund from the Public Wealth Fund of Saudi Arabia. Okay, so the SoftBank Vision Fund ultimately is led by the guy that you guys saw on the thumbnail. His name is people call him Masa, but his real name is like Masayoshi Son. I completely butchered that. I'm so sorry. But his name is people call him Masa. Okay. Now, why is this so important to understand what SoftBank's strategic vision is here? Their entire goal was to basically launch the massive levels of innovation that they're seeing was possible because of technology. So think of them as kind of a Tiger Global fund. Tiger Global is also a VC/hedge fund that invests in like really innovative tech companies, and they get them more in the Series C, Series D, not in the seed stage. And SoftBank's goal was like, look, we don't want to get a company when they're valued at $5 million, $2 million, right? Like $1 million. We don't want these early stage startups. We want companies that have grown to be 14, 15 billion bucks. And we want to just give them a couple billion bucks and have them 3x $5 billion, right? Like a 3x in the investment world is obviously very amazing. When you're playing at really high levels, you can argue a 3x is whatever. But if you 3x 5 billion and you had 15 billion bucks, but you can only do that when the company's in a sweet spot before it's public, but also not when it's in the early stages, because that requires so much more risks to bet if Robinhood will actually become the next Robinhood. So a 3x, 4x versus a 50x is great, but if you're 3xing $5-10 billion, that's a lot of money. SoftBank owns 91% of the shares when it comes to ARM, and they will still continue to have their 91% ownership after ARM. They initially funded ARM at a $32 billion valuation when they acquired all the shares back in 2016. They, I think, raised another round for ARM at $70 billion in October 2021. So I think their average is kind of around 35, 36 billion. I don't know the exact numbers on that, but they had to write down that valuation now down to $40 billion. So the valuation has decreased significantly from the last round, but they're still up on it because of what they were able to do back in 2016. They are going to be the ones that win in this IPO when it comes to the actual liquidity that they will be able to get. And again, they're still going to own 90% of the company when the thing goes public. The stock of SoftBank, which trades on the OTC markets, so I don't believe you're allowed to trade it on things like Robinhood. It's $22 right now. Year to date, the stock is up 6%. Max, the stock is up 206%. They went public in around 2010. What contributed to that overall raise in them going public were things like Alibaba. They invested $20 million in Alibaba in 1999. Obviously, Alibaba, multi-$100 billion company, right? So that $20 million turned out to be really well. And a bunch of other investments they made in the tech space that did well. The things that have hurt them deeply are two names. And this is why the ARM IPO needs to be successful for SoftBank, because if it's not successful for SoftBank, they're just going to have a lot more losses, and the Saudis will never give them a dime again, because the Prince of Saudi Arabia, he was like, yo, take 100 billion, go figure this shit out. They Saudi Arabia didn't want to deal with it. They gave it to Masa, and they were like, you figure it out. You're the investor, visionary guy. Like, you go give it to the best tech companies. And over the past 5 years, Masa has had a couple of screw ups. Before I talk about the big screw ups, the main screw up they had a couple months ago was an app called IRL. You guys might not have ever heard of it. IRL was the app. Okay, this is a social media startup. I think SoftBank gave them like a couple $100 million. This company shut down because 95% of their reported 100 million users were fake. They were not real. How did they fake 95% of 100 million users? I have no idea, but they raised a couple $100 million. They had a $1.1 billion valuation in, I think, August 2021 from SoftBank. And SoftBank they don't do these early startups deals. So they saw some potential in this company to really get in kind of early, not seed, but more Series A, Series B. And the whole thing was fake. So they had to take that much of a write down. That was one of their big mess ups. And then their the second to third big mess up that SoftBank had, WeWork and Uber. WeWork, for those that don't know the story, let me just say very quickly, the what's his name? I even forgot the name of the CEO of WeWork. That's Adam Newman, who now is doing a new startup. He had a 10-minute meeting with Masa, the guy who's leading the $100 billion SoftBank fund in New York City. And Masa is he's a very philosophical dude. He's not straightforward with you. He'll ask you these weird questions, or there's so many documentaries about this. So he just asked him, how big do you think this can be? And the dude was like, I think it can be really big. And then they go into a limo because Moss has to go to the next meeting. And he's like, how big do you really think it can be? And he's like, I think it could be a $10 billion company. And Masa told him, Adam, think bigger. But he didn't say he's going to invest. 5 days later, he calls him and he gives him a check for $4 billion. So unilaterally, the dude put in $4 billion into WeWork. I think it was at like a $16-15 billion valuation. WeWork today, the company's valuation, $273 million. That went to shit. And then on top of that, Uber also had some issues. I don't even know if they're break even on Uber. They invested, I think, at like a $95 billion valuation on Uber, maybe $80 billion valuation. Now the company's kind of around that range. So Uber didn't do that well. WeWork was a tremendous disaster. A bunch of startups have failed. They need ARM to go well. That's the one thing that's holding SoftBank up. So that's really important for ARM to end up doing really well. SoftBank hurting, dumping companies on the market. Yeah, and this brings up the next question. The next kind of part that I want to talk about within the context of the ARM IPO is this the top of an AI market bubble? ARM trades at 100 forward price to earnings, which is more than NVIDIA, and they're not growing at all as much as NVIDIA. The reason why investors are so obsessed about ARM, because every electronic thing that you look inside of your house right now, the chip architecture, meaning the design of how the chip was even created in the first place, comes from ARM, and what ARM has is a royalty on every single product they design a chip for. So when Apple sells, let's say 50 to 100 million of these iPhone 15s, ARM will get a small royalty on all of that. And that's pretty massive in terms of a business, but that means it's very cyclical, because what if people don't upgrade to the iPhone 15? What if people don't buy the new laptops? What if people don't get the new GPU chips in a year or two? When that stuff doesn't happen, ARM just becomes a hardware business that doesn't really have any distribution into the markets, because the demand is not there for people to be able to buy these products in the market. So at that point, it's not like they're kind of the AI play. They definitely are in the AI sector, but are they like a pure play kind of AI software company? Probably not, which means the question simply becomes, is SoftBank dumping these shares on the retail market when NVIDIA is at incredible valuations? Some could argue overvaluations. Is SoftBank dumping these shares on the market when there have been zero IPOs? There have been a couple IPOs, but frankly, zero IPOs over the past year and a half, because obviously the markets have tanked. And finally, because the S&P is up 16% year to date, there is some momentum in the markets for a company to decide that it's the strategic time to go public, which Airbnb did a great job of in 2020 as well. And they tanked for a while before they got back to normal. This might be the perfect timing for them to go public, but it might be at the cost of the retail investor that ends up holding the bag for these shares, which is why I personally will not be investing in the ARM IPO. Now, it's not like I have millions of dollars that are just sitting on the side for me to decide to invest in the ARM IPO. And if I did have any money to invest in the ARM IPO, it would be like $1,000. But nonetheless, I am conservatively deciding to not invest in the ARM IPO and save some money here. What time is AIP on today? AIP is going to be at 11:45 a.m. I'll be live with my channel with Arnie, and we'll be covering it. So it'll start at 11:45. We'll start with the pre, what do you call it? The pregame show to get there. Amit, do you think there is going to be chips in everywhere, like fridges, microwaves, smart homes? Yes. Yes. We already have chips in smart fridges. I don't have a smart fridge because I'm not, I don't see the need for a smart fridge, but nonetheless, Samsung sells a shit ton of smart fridges, right? Like if AI is going to be enabled in all parts of our life, which I truly do believe in that thesis, it's going to be in the hardware. By the way, we'll talk about Apple in a little bit, but a little preview on this. Apple is launching an AI app store, and that's going to happen in 2025 in tandem with the Vision Pro. And when I heard this yesterday, I was like, what do you mean by an AI app store? Wouldn't they just have AI apps on their app store? Apparently, no. They're launching an actual app store dedicated to AI products. So everyone's saying Apple's not an AI play. They might end up being a really big AI play in terms of the ecosystem for developers on the Vision Pro. It depends on the success of the Vision Pro. Do people actually use it? But AI is going to be everywhere, in my opinion. It's definitely going to be integrated into our hardware. I don't even think we've seen the next generation of devices that will actually help us when it comes to hardware. So yeah, ARM is going to be very valuable over the long term if their chips will sell. But the question is, will those chips even sell? Are you going to be live streaming on the AIP? Correct. I will be live streaming on the AIP. ARM can also be in data centers. That is also very true. Samsung already has it. Yep. Samsung has had these smart fridges for a very long time. Erwin, insiders profit only, idiots purchase only. Yeah, look, if that's the quote of the live stream, I think this is the quote of the live stream. Insiders profit only, idiots purchase only. I'm not saying you're an idiot if you're buying the ARM IPO today. It's just one of those things where, do you really think you're smarter than everyone else who's, to the people the beautiful thing about a market, and this is what I really understood over the past 7 months, there has to be exit liquidity. Like this concept of exit liquidity, I want that to be ingrained in everyone's mind today, because I don't think we think about it enough. If you buy an options contract, you got to sell it to somebody. If you buy a stock, someone has to hold that stock eventually when it runs up. So the question becomes, are you an idiot today for taking SoftBank shares and giving them the liquidity to exit on some of their position? Or are you a genius because you're holding this for the next 10 years, and over the next 10 years, AI is going to be so transformational and ARM is going to be embedded in everything, and this $41 you pay at a $50 billion valuation is going to end up being a $500 billion company? Like, I don't know. That's the beauty of taking risks in the market. But the point is, do you really have to be this early is the question. Do you really got to be this early? Especially like when you're investing in a startup or something very early, you're investing because you're taking a risk, but the risk could be like a 50 to 100, much less like a 200, 300x if the shit works. And so that's why you want to be early, even though the risk is higher. For ARM, it works, but like, do you really want to be that early? That's a Warren Buffett quote. Okay, that's a Warren Buffett. I didn't know. Wow, Warren Buffett said the word idiot. I never knew Warren Buffett said, wow, he's such a teddy bear. He said the word, yeah, that's a good quote by Buffett. That makes a lot of sense to me. Hey, Amit, would you short ARM? No. I am of the philosophy. I share the same philosophy as Chris, quite frankly. First of all, I don't know how to short companies. I know how to buy some puts. Shorting is a little bit more complicated. Second of all, it's like, you don't know what, and this is why there were people in the live stream, I remember in October 2022 on the same market open that were saying, I'm short NVIDIA at 280. And at the time, yeah, it kind of made sense because it's overvalued. And then look where NVIDIA is right now. So shorting companies is very dangerous. Where's Tupperware, by the way? Where's Tupperware stock? Tupperware stock, because this stock ran up 500%. Okay. So Tupperware is down it's down about 80% from the highs, or almost, yeah, about 50% from the highs. But if you shorted it, a little bit, but there are still people up on the investment, right? So it went from 67 cents to $4. Now it's at $2. So if you shorted at the very top at $4, maybe you made some money. If you're shorting it now, does it actually get back there, or does it go back up? Or if you decided to short, a little bit earlier a year ago, were you really correct on your short? And that's why shorts are just hard. Now, maybe a company like Tupperware is super speculative. So you're like, oh, I'm definitely shorting Tupperware. Why is Tupperware up 500%? But it could keep going higher. And then when you look at real well-established companies like ARM and NVIDIA, I wouldn't recommend ever actually shorting that stuff. It's just, it's scary at the end of the day, in my opinion. AJ says, I'll say it. If you buy ARM today, you're an idiot. All right. Not me. AJ said it. Okay. So that was, we went over PPI. For those that are just joining, PPI came in at 1.7% year over year, 0.7% month over month. It was worse than expectations, but not worse enough for the market to tank. S&P right now at $449, touching almost $450 in the pre-market. So that is the coverage, and that is hopefully getting people up to date on PPI and ARM. Let's get a new update now on something else that I wanted to talk about, which is Unity and some of the issues that they're having right now with gaming. So this story broke last night, and apparently it's a juicy story because it's like really intense what's going on in Unity. Essentially, the Unity CEO, who has had a history of trying to profit as much as he can on gamers and app developers, decided to rush out a policy last night that developers are incredibly upset about. Now, I don't care about video games. I'm not a gamer. I played Madagascar on a PS2 back in like 2007. Like I don't play video games. I had Wii Sports. I was in Nintendo a little bit. I played Super Mario Brothers. But quite frankly, you cannot pay me enough money to sit and play a video game. Like I get so bored of video games. But I'm not the whole world. There's a lot of people that play video games and enjoy video games. And there are two main companies, Unreal Engine and Unity, that develop the software, especially when we're talking about the VR stuff. When it comes to Unity, Unity actually has an official partnership with Apple for their Vision Pro to be able to build software products and games for them. So here's kind of what happened. Unity, the tech company behind one of the most popular engines for creating video games, is scrambling to clarify how a price increase for its services will work after its announcement Tuesday morning broadly infuriated the game development community. The fees, the plans that they had are as follows. So it's called a runtime fee. With Unity's new plan, developers who use Unity's free tier of development services would owe Unity 0.20 cents per installation once their game hit the threshold of 200,000 downloads and earned 200K in revenue. So if you're a developer and you had a game that hit 200,000 downloads, which is pretty phenomenal, or earned 200,000 in revenue, every time someone new downloaded your app, regardless of whether you make revenue or not from that new download, which you probably will if you've been able to, monetize 200,000 downloads, but whether or not it happens, you owe them 20 cents. Very kind of equivalent to Apple taking 30% off every transaction that with Apple Pay. I mean, if you buy anything, you buy a Spotify premium service upgrade, Netflix premium, like your Apple will take 30% of that because you're doing it through the iPhone. Developers paying over $2,000 a year for Unity Pro plan would have to hit higher thresholds and would be charged with lower fees. And the new fee system will be starting in 2024. Now, why was this a big deal? This was a big deal because essentially developers are saying, look, we're already in a high interest rate environment. We're already struggling for ad revenue. We're already struggling to get people to actually download games. We're already struggling to get people to care about our products. Now you're telling us that we're bringing all the value to you. Like, yeah, we're using your shit to build our game, but we're the ones building the traffic, right? Bringing the users to even use your product in the first place. And now you're telling us we owe you a ton of more installs, right? This is problematic because what this ultimately would do is create something called install bombing. And we talked about this yesterday on Finance Junkies, where a lot of people would just download apps over and over and over again to make you download more fees, or the metrics behind how we understand the ability to download an app, or at least the paradigm by which people understand app downloads will get messed up. It's very similar to iOS app ratings. I mean, you can pay companies in India that will do 1,000 app ratings for you and basically make it seem as if your app is good, but a lot of those ratings are fake. So a lot of this stuff just gets into the nitty gritty of where Unity will be going, or and how Unity will ultimately be able to think of monetizing this. Now, for Unity shareholders, this is great, because at the end of the day, like, you're making more money, and Unity is not a profitable company, and they have a shit ton of dilution and stock-based compensation. That's the one bad thing I've seen about Unity for a long time. Darpin says Unity provides the tools 100%, but they have a lot of stock-based compensation, right? So they need to get to GAAP profitability. Unity is one of the growth stocks that people would argue is still speculative, even though they have a partnership with Apple, but they haven't been able to get profitable. So yesterday they fell about 5%. For the month, they're up a little bit. 6 months, they're up 34%. Year to date, they're up 36%. So Unity shareholders have done pretty good over the past year, or at least year to date. Unity shareholders have not done that well if you bought the stock in 2021. This stock hit a high of $196 back in 2021. And that just goes to show you how insane the market was in 2021. Going back to the ARM discussion, I think that's the existential question of today. Unity at $196.65, November 12th of 2021, kind of sounds crazy now that you look back at it. And $36, even that could seem a little expensive right now, given the nature of where the macro is, interest rates, inflation, etc. The question becomes, if we have not quelled inflation to such a degree, if we know we're not getting an interest rate cut till at least June of 2024, is ARM's IPO going to look like Unity's stock chart right now, where you look at it a year from now and you're like, ARM went public at, people were paying $60, $65 for this company, and now it's at like $30, $20, which is probably going to be more reasonable at the time if the macro doesn't get better. These are a lot of things that go into the discussion when it comes to ARM and their IPO. Ultimately, what I think is going to happen with Unity, I think they're going to reverse the decision. I really do. I don't think they're going to keep it going because, yes, they have a monopoly, a pseudo monopoly on games, but at the end of the day, I don't think they're going to let the developer community be this upset at them. Now, maybe they come to a little compromise in terms of how they end up splitting the fees, but I think they'll end up figuring out something to be able to do to appease developers, because you just can't have developers this mad at the end of the day. Jess says, great shirt, Amit. I'm channeling my inner Carp. I was going to wear either a white shirt with half sleeves like Carp, or I was going to wear purple. And I was like, you know what? Let me do purple. And so we'll see what happens. Any thoughts on SES Unlimited? I've heard of these guys. I think their ticker symbol is C, right? I don't have a lot of thoughts on them. I got to do more research on them. So I know Kathy was in it for a while, and then Kathy got out of it, or I think she's still in it, but no thoughts on it currently at the moment. Amit, what time is AIP today? 11:45. 11:45 Central Time for you. It'll be 10:45 a.m. Eastern. 10:45 a.m. Central. 10:45 a.m. Central. Okay, cool. So that's the Unity update. Now let's get on to something else that's very important for the macro. The auto worker strike. Auto worker strike. If you don't know about this, you need to know about this. I think it's incredibly important. I've been doing a lot of research on this. And if you are in the business or in the market for a car or just in general trying to understand inflation, this is something to understand. So we talked about this a little bit yesterday. Auto workers at GM, Stellantis, and Ford are basically saying, look, the CEOs are getting a shit ton of money. We deserve to increase our wages by 40%. Inflation has taken away about $5,000 a year from the purchasing power from average workers. These are blue chip workers that are, working these types of jobs. And they're like, this is just impossible. The workers union has about $825 million that they can pay if all 157,000 workers were to go on strike for the next 3 months. So both sides don't think it's going to be 3 months, but if it is long, then there's going to be a decent amount of money that gets paid out by the unions. Why does this matter for inflation? At the end of the day, if there's less cars, there's going to be more inflation, right? There's going to be less supply. Already the price of a car right now is $738 or $783 on average. So it costs $783 to buy a car in the United States of America. And that's not just Teslas. We had someone in the live chat say yesterday, that's Hondas, that's Toyota Camrys, like these cars that I pay $300 a month for my car. Now it's $700. Like that's insane. And so if it's already expensive to buy a car, the used price index, which is one of the charts I want to show, let me share that real quick. The used car price index, which is a huge, it's about 7% of inflation, right? Of CPI. So in my opinion, that's pretty decent. 7% of the overall CPI of used cars, that matters. It's coming down. It's going down dramatically. If you look at this right here, look at where it was back in October of 2022. It's just like ridiculous. When you look at the chart from 1997, obviously it looks insane, but reasonable, keeping up with the pace of inflation. But then it just gets to an exponential growth curve in terms of the used value, the overall price for a used vehicle. That's starting to come down. It came down about 15% last month. If it comes down another 29%, which it's on track to do, we are going to see a pretty steep decline for 7% of the overall CPI, which means maybe, just maybe, there's a chance we get a 2 handle on CPI by December, which is going to be incredibly important for the Fed to just stop raising the rates, especially if they do a November rate hike. You want as much ammo you have, whether it's rents, gas, which, hopefully that can come down a little bit over the next couple of months, or definitely used cars, to be able to help. Well, guess what's going up? Used vehicles will go up if there are less regular vehicles on the market, because if there's not regular vehicles that people can buy and they're going to try to buy used vehicles, there's going to be more demand for used vehicles. And if there's more demand for used vehicles and less supply of those used vehicles, inflation will be sticky. And it's this type of shit that is really scary, because S&P is up 16% year to date. You imagine some of these factors colluding with each other by the end of October, November. Like, we still haven't had a 10% correction in the S&P. I've been of the mindset that we're going to 420 on the S&P. And I still kind of think that could happen. Granted, if we end September kind of clean, October should be a little bit more stable. September is a little bit harder. But we haven't had a 10% correction. You have a lot of events come into place where it fucks up the Santa Claus rally. It can be pretty bad. So hopefully that stuff doesn't necessarily go into the wrong direction. Let me just pull up one clip I wanted to show on the auto strike stuff, and then we'll keep going from there. Stock of unused cars is also important. 100%. I agree. Biden administration needs an auto union to be happy and the strike to be over ASAP. Now, I'm so happy, Heinz, you brought this up. Joe Biden is in a really tough situation right now. And the reason Joe Biden is in a tough situation is because he is a pro-labor president. He is the guy that goes to the auto unions and speaks in Detroit and Michigan, and really is Detroit in Michigan? Yeah, Detroit is in Michigan. In Detroit, Ohio, etc., and says, look, I'm for you guys. Well, they're on strike. And they're on strike for a pretty reasonable argument. I mean, I don't want to get too political here, but their argument is like, look, the CEOs are making a shit ton of money. It's not our fault that inflation is going up. That's actually, one could argue, Biden's fault, given the extra stimulus bill he did in 2021, when people could argue, look, do you really need to print another couple $1 trillion? So at that point, if it's the government's fault and the CEOs are making more profits, raise our wages. And there's also some great math that if you raise the wages by 40%, labor is less than 5% of the costs for Stellantis, GM, and Ford. It's not the biggest cost. People think labor is a very tiny cost at the end of the day. That's why they're able to make so many profits. And so their argument is pretty clear. Joe Biden has to make a decision now. Do I side with the labor union, which morally and objectively he should, given his political stance on everything, or do I side with Farley, the CEO of Ford, who, by the way, Jim Farley's grandfather was the guy that helped Henry Ford build the first Ford. So this guy is like Ford thick and thin. Do I go to him and tell him to strike a decent deal with these guys, but maybe not the deal that the auto workers union wants? Because if inflation goes up, because these cars aren't in supply, and that ends up ruining a lot of some CPI reports over the next couple months, then I'm not getting reelected. Because if inflation goes back from, we're at 3.7. If it goes to 4.2 because of freaking cars, because you're not paying workers, like because of a strike out of all things, that would be pretty rough. So I think Biden has a unique sort of a conundrum that he's facing right now. And I don't know if he's awake enough to know if the conundrum is happening. I don't know if he's still sleeping. I don't know if he even knows what's going on in the world. I heard some clip today on CNN. That's not to be mean, but that's just the quite reality. But I heard a clip on CNN today saying that don't expect Biden to even show up for re-election campaign events for the next 5 months. And I'm like, bro, in the next 5 months, isn't the shit in November 2024? So we're almost kind of there. And so it's just very interesting to kind of see what he's going to be able to do. Here's an update on the auto worker strikes.
We are, Becky. We're about 18 hours away from a possible strike by the UAW. And yesterday, the UAW came out, as they've been doing over the last couple of weeks, saying, here's where we stand, here's where the big three stand when it comes to the most important issue, which is a pay raise. How much will the prices or the wages go up for the UAW members over the next 4.5 years? Look at the gap. It still exists here, according to the UAW. Now, they say 40%. I've talked to people who say they're closer to 35, 36%. According to the UAW, the big three are somewhere between 17.5% and 20%. Here's UAW President Shawn Fain talking last night on Facebook Live about his assessment of the situation.
Altogether, we are seeing movement from the companies, but they're still not willing to agree on the kinds of raise that will make up for inflation on top of decades of falling wages. And their proposals don't reflect the massive profits that we've generated for these companies.
All right, so if we do not see a deal by 11:59 p.m. tonight, here's what the UAW says will happen. No deals, the strikes begin. They will be targeted at select plants initially, not across all of the automakers all at the same time, but they expect to probably strike all three automakers if there are no deals. And if the talks drag on, Shawn Fain says the strikes will grow primarily here in the upper Midwest, which is where you see most of the big three facilities. Ford frustrated with the pace of talks. Within an hour and a half of of Shawn Fain's post on Facebook Live, they issued a statement saying if there is a strike, it's not because Ford didn't make a great offer. We have, and that's what we can control. Just take a look at shares of Ford, GM, and Stellantis. Remember, the contract expires at 11:59. Guys, last night, Jim Farley was at an event for the Detroit Auto Show, and you can see he is frustrated. He says that him and Bill Ford went on Tuesday to the negotiating session, made their best offer, and were surprised that Shawn Fain wasn't even there. And he says they've made 4 great offers, in his opinion, and they have not received a legitimate counteroffer.
So I think this thing is more serious than people are giving it credit for. The companies, the Ford CEO said they made 4 pretty good offers from their perspective. And look, a negotiation is a exchange of different expectations. The union auto worker president, Sean Fahey, he didn't even show up to the meetings to listen to the 4 offers or to discuss the 4 offers that were given by Ford. I mean, 4 offers back to back to back, and the guy doesn't even show up to the meeting. That means these guys aren't like playing around. They're like, no, we really want you to listen to our demands and our goals. And so if you ever taken a negotiation class, I took one in college, there's something called a BATNA, which is your best, damn, I'm already forgetting these. So this is why college is ridiculous. Negotiation BAFTA. People will know if they're best alternative. I really forgot this. I'm sorry to the teacher who taught me this stuff. Best alternative to a negotiated agreement. What the union auto workers are saying is that we don't even have a BATNA, because we're not even listening to your policy. It's either my way or the highway. And so a lot of these, Ford, Stellantis, GM CEOs, they're going to really have to give a really good update to the proposal to even get to the point where there is a common BATNA, a best alternative to a negotiated agreement, between the two sides. And if they don't, we're going to have inflationary pressures that go up a little bit more harder. There was a great point by someone in the chat. Ryan Clandening says, car companies, it's not the labor cost, it's the retirement benefit liabilities that carry on their balance sheets a major expense. That's a great point. I didn't even think about that. Labor cost is less than 5% of their overall costs. The retirement benefits that these car companies have to pay, which is, I think, the motivation for being a factory worker. You know, in retirement, you're going to be taken care of very well because being a factory worker is a demanding job. It's very tough on your back, tough on your shoulders. Like it's a tough job. So you got to do it because you think, look, in my retirement, I'm really going to be taken care of by the company because the company's giving me these benefits and they're promising that if I do this tough stuff, I'll be okay. So I didn't know that they carry those retirement benefit liabilities on their balance sheet, which is a liability. Ultimately, they have to pay those retirement benefits off back to their workers when they retire. So that seems to be a more major expense than the actual cost of the labor in terms of the salary in and of itself. Joseph Ting says NBA talk. Yes, basically, this is a NBA talk. Okay, let's do one update. We have we'll do this very quickly. We have Robinhood. We have the ARM IPO in a couple minutes. Let me do a quick Robinhood update and then get ready, get your popcorn because we've got markets that are going public and a new company that's hitting the public markets. Robinhood put out August data yesterday. So a quick rundown through the data. Net cumulative funded accounts, they were up 23.2 million, up 30,000 from July 2023. Not too bad. Monthly active users declined to 10.6 million from 11 million, down 400,000 from July 2023. I'll talk about that in a second. Assets under custody in the end of August were 89.7 billion, down 5% from 94.6 billion in July 2023. However, net deposits translated to a 20% year-over-year growth. They got 1.6 billion dollars people decided to throw into their Robinhood app in the month of August. Net deposits were 17.6 billion trailing 12 months, translating to an annual growth rate of 25%, which is just amazing that people are deciding to put $1 billion a month almost into, or more than $1 billion a month, because 12 months in a year, net deposits 17.6 billion over the past 12 months. So more than $1 billion a month going into those Robinhood accounts every single month. It does show that people do have some trust in the platform and like using it. Trading volumes in August were slightly higher for options, lower for equities. Equity notioning trading volumes were 59.8 billion, down 14%. Options were 173 million, up 1%. Now, what is the point of this report? I think Robinhood is like slightly down or kind of flat. This really matters because even though they dropped MAUs by 400,000, which everyone says is the bear case for Robinhood, that just means in August, 400,000 people didn't check their account or open up a trade or whatever, however they define MAU. That still means they have 21 million users. It just means those 400,000 people month over month didn't use the actual platform in terms of doing anything. That doesn't mean they took their money out. That doesn't mean, they're canceling their accounts. It just means they weren't active. Why weren't they active? Because August was a down month. The S&P declined about 3% in the month of August. It recovered it very much at the end, but it ultimately declined. So if you have a bad month in the stock market, people aren't going to check the stock market, which means there's not going to be that much money going into the stock market, especially on a retail trading app like Robinhood. On top of that, net assets under custody are 89 billion. They're down from 94 billion. That doesn't mean they lost $5 billion. That means the value of the assets under custody, because the market went down, also went down. So that's why they went down dramatically in 2022, right? Because when the market crashes, all the assets on your books, they have to come down because now their stock prices are down. So they still got $1 billion in deposits. And then here's the kicker. Even though their MAUs went down by 400,000, this is why I'm so bullish on Robinhood, options trading value was up 1%. So you can have less users, but have those users actually use the product even more and still be able to generate a decent level of transaction volumes, which results in transaction revenues for the company. So we'll see what transaction revenues ultimately come out over Q2 earnings or Q3 earnings in November. But I don't think this was that bearish, to be honest. I think this actually was a great month for them. Could it have been better? Sure. But the fact that they got $1 billion coming into the accounts and their assets under custody only went down about 5%. Given what we saw in August, wasn't too bad for Robinhood. All right, here we go. We've got the market open. Thank you, 500 people, for being here. There's ARM right there. You can see it on the screen. It is halted right now at 9:30 and 40 seconds on the United States of America and across the world on planet Earth. We will see this company that goes public. And this company was one day inspired by a vision 30 years ago. This guy had this idea to come up with this thing. A lot of hard work went into it. So there's going to be a lot of people that are very happy today, a lot of people that receive much needed liquidity, and SoftBank that gets to dump their shares. But there might be some retail investors that either make some money today or are left holding the bag. We will find out in 5, 4, 3, 2, 1. Ladies and gentlemen, the stock market is now open. Here we go. All right, we're gonna wait till this comes up on the market in a second, and we'll see where it goes from here. It's probably loading up in a minute. Tesla at $271, 0.09%. SLG down right below $40. DNA, Ginkgo Bioworks, $2.20. Apple, $174, falling a little bit from yesterday. QQQ, $376. S&P, $449. So the PPI for those that are joining came in about 1.7% month over or year over year, 0.7% month over month, slightly above expectations, so a little bit hotter than we thought, but still not as bad as the market thought it would be, which is why the S&P is up and why the QQQ is up as well. Palantir AIP conference, I'll be live streaming it today, 11:45. Right now at $1574, so it's up slightly a little bit today. But Palantir right now at $1573, and we'll have a little bit of an AIP preview in a second and see what goes on from there. ARM is still not public on Webull the way I'm looking at it. Let me look on Robinhood and see if there's any momentum there, or if we've got something else going on here. Okay, so either it's not public yet or it's going to go public in a little bit. I might be wrong about the time it goes public, but I'm showing on Robinhood right now it's at 51. So maybe in a little bit we're actually going to see it go live. 12 p.m. it goes live. Okay, so yeah, that was my mistake. It goes live 12 p.m. So it won't go live right now. We still got the rest of the market opening, but it will go live at 12 p.m. I should have known that, but I did not know that, so we don't have that there. Palantir at $15.80, up 1.28%. Disney at $84.34. SoFi $8.95 at $9. It was at a couple days ago $9.17. We'll see if it can retain that $9 level right now, up 1.7%. NEO at $10.25. Alibaba $88. Fubo $2.55. Truist had a nasty decline yesterday. I mean, Truist fell about 5% yesterday, so that really was not the best for Truist. However, Truist is recovering a little bit today at $29. I'll talk a little bit more about them. Did a little bit more DD on them today. I think Truist is going to be fine. Remember, Truist is trading at a PE of about 6. Average bank trades at a PE of 14. With a bank with Truist metrics and financials should really be trading at a premium above 15. So talking about $54 fair value right now at 29. So I think there's a lot of value there, but the market is not happy with regional banks. They're not happy with banks overall. And that's primarily because of what we are seeing with interest rates. I also have an update on the UBS CEO who went live on CNBC today, and we're going to listen to what he had to say about the banking sector. Dutch Bros at $26, up about 1%. Roku at $78. Enphase $121. C3 AI at $28. Nvidia $458, up nicely from $446. So it's at $458 now. Google, look at that. Google's nearing towards $140. Market cap right now about $1.74 trillion. Google was at $85, around $94 in January of 2023. So just absolutely phenomenal 40% year-to-date gain by Google. And the reason this is happening is because of AI. The market is seeing the potential that Google has, particularly in their TPUs, to be able to do something around AI. Google is now at a 52-week high at $138.59 today. Spotify 156. Bitcoin, nice little run up, 26,700 from the lows of 24,916 just a day ago. So not bad at all for Bitcoin. You got PayPal at $64, not bad. PayPal up 1.75% on the day. Robinhood $10.62 down just a little bit. Coinbase at $82 and ARK Innovation at $43.90 on the day. IPOs usually open up at 11. Yeah, I think ARM IPO will be, I'll get the exact result, but I believe it'll be opening up at 12. It might be at 11 Central Standard Time, but 12 Eastern Standard Time. That's interesting. I thought it was going to be early in the morning, but that actually makes sense. The IPOs never go early at market open. And quite frankly, that's good because I think the SEC would have a lot of issues just dealing with an ARM going public in the market right early at the morning. I mean, probably be halted like crazy. So it makes sense that at 12 p.m. after the market cools down a little bit, it's going to go live. SMCI at 274, Snowflake at 166. Roblox fell 10% yesterday. Kathy Wood bought 480,000 shares in the ARK KK Innovation Fund of Roblox. And she sold 51,000 shares of Tesla. Now, I think the selling of Tesla was due to rebalancing, so it wasn't like she's necessarily bearish Tesla, but she's definitely very bullish Roblox. I looked at Roblox's financials, and they don't look good. This is definitely a growth stock financials at a time where interest rates don't allow growth stocks to have the type of financials that Roblox has. I'm not a fan, really, of this company, and maybe there's a larger story that I'm definitely missing here. I probably am if Kathy is buying 500,000 shares, in a day. Why did it go down 10% yesterday? I also don't know. It seemed pretty random. Maybe it was macro related. I don't think there was any piece of news that dumped it that much yesterday. But as we can see, yesterday was at $26. It was pretty bad. So not sure exactly why it went down, but we did see a decline there, and Kathy ended up buying the dip. Tesla right now 271, Apple 174, S&P 448. S&P in the Qs holding up very nicely, even with a hotter than expected PPI. The NASDAQ We're getting in at 13,865, up 50 points. And Palantir, look at that, $15.89, 1.86%. AI Pecan is going to be happening in the next couple of hours. And we got SoFi hitting $9, up 2.2%. Let me share a quick clip of Anthony Noto, CEO of SoFi Technologies, talking about SoFi and what he expects for Q3 in November with Jim Cramer yesterday. This is a 1-minute, 30-second clip. Let's get an update on this. And then we're going to move on to banks and what's going on. The UBS CEO that acquired and put Credit Suisse out of her sweet, sweet misery talked about the acquisition and what's going on in the world of banks.
Solutions to real money problems, whether it's saving money or getting a better return on high interest or finding a place to make investments in a diversified portfolio.
Are any of these answers to those questions generative AI? Because that would be hard every day to come up with. Like, I mean, you need a team of economists that you would ruin your bottom line.
We have a significant amount of people that are experts in computer science as well as data science, and we're using their knowledge and capability and this great data source to help train models.
Now, I know that a lot of pundits are saying, you know what, the consumer's really tapped out. I've been hearing this. Now, Brian Moynihan disagree with that. But you sound like that things are robust.
Well, we're really stealing share from the big banks. And so we've been able to add more than $2 billion of deposits in each quarter since getting our bank license. And when we reported in Q2, we remain confident that we could add $2 billion plus each quarter, and we're on track to do that. We're also seeing the networking benefits of having this large installed base. So our marketing is becoming more efficient. People are more aware of us, and we're driving better cross-buy. So we've started to see the compounding impact on our member and product growth in Q2, and we're seeing it really continue in Q3.
That's a really good update from SoFi. I mean, they're seeing deposits on track to still be $2 billion in per quarter by Q3. So they're probably at like 1.6, 1.7 right now. They got another month and a half left. They're likely going to get to that $2 billion mark. I think they had 2.7 billion last quarter, if I'm not wrong. And then they're seeing the flywheel work out. The bull thesis on SoFi, and I get more bullish on this company every single day, is that they're taking market share from the banks. It doesn't take a rocket scientist to just understand the simple fact. At Capital One or Bank of America, whatever, you're getting 0.001%. What it's like basically nothing on your money and interest. SoFi is giving you 4.5, right? Robinhood's giving you 4.9. So that is very attractive to consumers that don't want to be at a physical branch to first get them in the door. And once you got them in the door, there is this thing called the flywheel effect around cross-selling and upselling, given the brand equity that SoFi is developing, obviously with their name getting out there more, SoFi Stadium, all that stuff, for consumers to have an affinity towards the brand, be able to invest with the product, be able to get 5% or 4.5% yield on your direct deposits. And then on top of that, potentially get a loan from SoFi at a pretty decent rate. And they're targeting people that are like doctors and lawyers when it comes to student loans and regular loans, automotive loans. These are people that are likely not going to be delinquent. So at a $10 billion, $9 billion valuation, it's not the craziest company in the world. Now it's run up significantly from 100% from the lows in March or in May. So that is where I think the major risk is from a macro perspective right now. But in terms of what they're doing, if they're stealing market share from the big banks, which even if they are, the big banks are not going to be in trouble. I mean, this is pennies to the big banks. The fact that they're doing that is a massive bull case for SoFi in order to be able to get there. Looks like Anthony Noto is interviewing with the Sesame Street puppet. Well, the good thing is Noto is friends with Cramer, and Cramer likes him. So, I mean, they talk a lot, and it makes sense when he is able to give these updates because he's able to just reinforce the belief that their strategy is working. And then Noto's just an exceptional leader. So, like, you have all these theses around the company, and then you look at the guy who's running it, and you're like, I think I can trust that guy. I know it's speculative. I know it's a growth play. And if they're going to be profitable in the next couple of months, I think there's a really good chance to seek some alpha on SoFi. I think it actually makes a lot more sense in terms of what the overall thesis is. Okay, so that was a little bit of an update on SoFi. Let's move on to a couple of other things that we had to get to. We talked about PPI, ARM IPO. That's going to be at around 12 p.m. One piece of news yesterday that was really interesting to see and a little bit concerning if you are into the world of coffee, but not drinking coffee, investing in people that drink coffee, is Starbucks CEO, who was on the board. He was the former CEO. He joined and left the company a lot over the past couple of years. He is stepping down from the coffee chain's board. Howard Schultz is officially leaving the Starbucks board. I think he's done this like 17,000 times, but yesterday he decided, I'm officially leaving again. Now, why is this ultimately happening? Let's read a little bit from here. Schultz said in a statement, I look forward to supporting this next generation of leaders to steward Starbucks into the future as a customer, yada, yada, yada. None of that stuff matters. But some of Schultz's actions created new enemies. He took a more aggressive approach against baristas unionizing than Kevin Johnson, who took over as the CEO after Schultz's second stint. Starbucks workers, United, and allies such as Bernie Sanders made billionaire Schultz face the wrath of Starbucks' anti-union stance. And quite frankly, Schultz was absolutely correct on his anti-union stance in the context of what he was talking about with Starbucks. Starbucks has some of the best benefits that I've seen. They're the most, from I've seen coffee places, worker friendly. And so this guy had reasonable arguments, but still the media painted him as a really evil billionaire dude. He previously stepped down from the Starbucks board in June 2018. So he's done this before to prepare for a potential presidential run. Before deciding against the bid, he had already handed off the CEO role to Johnson in 2017, came back on the board, and then left. The president of Alibaba Pictures Group, or the former president of Alibaba Pictures Group, is now going to take his spot on the board. And so this was really interesting for me to see. Let's go to the Starbucks stock and let me know in the chat if anyone owns this stock. I owned it very briefly in 2020, maybe like 10, 15 shares. And then I got out of it after like a little bit of a gain. SoFi, by the way, at $9.04 right now. I think I bought it at $50, 55 in 2020. So if I had held it, I would have basically doubled from 2020 to 2023, but I didn't hold it. I sold it when it got to like 59 or $60. Now it's at 96. So it's done well since 2020. Obviously it has fallen dramatically from 2021 when it hit the highs of 120. As you can see in 2020, 2022 gets to some lows, but then it comes back up to 97. So stock year to date has actually not done that bad. Quite frankly, shareholders have been rewarded. The dividend yield on this company, which is why most people like it, is about 2%. Shares outstanding 1.15 billion. It's not really a growth company anymore, but they have insane international growth. They have 43,000 locations worldwide, heavy presence in China. But it's one of those things where Howard Schultz might be seeing either a little bit of China exposure and he's like, look, I'm not really liking this stuff, I want to get off, or he just wants to run for president and maybe he's going to go against Biden. And if that happens, that'll be interesting. But that did happen yesterday for Starbucks investors and they had to deal with that. Apple at 175, S&P at 448, QQQ at 375. We got a lot of green. Palantir breaking $16, up 2.72% right before Palantir's AIP conference. Tesla at 273, Palantir at around $16. Philip Rizzo says Amit was ooh for pumpkin spice lattes. I've had a pumpkin spice latte once. I don't get the hype. I like caramel lattes more than pumpkin spice lattes. I know that is still pretty white girlish of me, but nonetheless, I don't feel the hype for pumpkin spice lattes. SoFi at 902, Neo at $10.28, Alibaba at 88, Disney at $83, Truist at 29.17, Fubo $2.57, and you got Enphase at 122. $122. So overall, a green market. I mean, not bad at all. It's pretty green. There's a little bit of red here and there. Rocket Labs, a little bit of green. We got Netflix, a little bit of green at 404. Robinhood down about 0.71%, probably on the August metrics, but overall, not bad at all. Even PayPal nicely at $63.49 on the day. Let me go to some new updates regarding some stuff going on in the macro, and then we'll keep going from there. I also think we have an official or an exclusive interview with the head of SoftBank. I don't know if that's here yet or not. Probably it might be a little bit before. It might be at 11 a.m. versus at 12 p.m. ARM shows will go public at 12 p.m. So we're likely going to see that happen a little bit in from here. Palantir kissing 16. Yep, Palantir is kissing 16. AMC is running big time. Hold on. Why is AMC running big time? Where's AMC? AMC is up 5%. All right. After a reverse split and being down 80%, we got a 5% gain on AIP. That's great. Gail Thomas says Apple Crisp Oatmeal Shaken Espresso is amazing. This is how you know you're rich. Okay. Gail, I know the job you have. Don't you act like I forgot the job you had. I know the job you have. I'm not going to tell people the job you have, but this is how you know you're making enough money, because you can buy Apple Crisp Oatmeal Shaken Espressos, or you can make them. If you can make them, that means you have enough time in the day because you're so rich to make that shit, because I've never seen that before. But no, I've never tried that, but it seems like it's not too bad. Let me pull this thing up real quick. Matthew, what time is the ARM IPO? 12 p.m. I actually thought it was going to be earlier than that, but I was wrong. I thought it was going to be at 9. It was actually at 12 p.m. Okay, yes, this is what I wanted to show up, and then we're going to talk a little bit more about some different stuff going on in the macro. So this was really interesting. We had an update today on Gen Z and how they conceptualize the future of work. And the reason this is so interesting is because no matter what company you're invested in, especially if you're invested in large cap tech stocks, they are going to have to adjust, whether it comes from a work from home perspective, which influences REITs and the real estate market, or a general, understanding of how they pay and compensate these employees based on how they conceptualize working and how they think about career choices. One of the biggest stats we've seen is that Gen Z barely spends 24 months at a company because they decide to leave. There's really no customer or employee loyalty that exists anymore. So here's a professor from NYU that came on CNBC to discuss this today. And I thought it was incredibly interesting. And then we'll get into some more macro stuff to discuss from here.
What this all means is NYU Stern School of Business professor Susie Welch. What is going on here? I think we all have this expectation that, our kids are going to have a harder time than we had, but they feel so much better about the situation.
Yeah, when I first read about these results, I thought, well, the death of Gen Z has been greatly exaggerated, right? Because our generation, and the statistics, the Gallup poll really shows this. Our generation is sort of that they're dead to us. They're over. They're entitled. They're lazy. They don't know how to work. But Gen Z is filled with hope and optimism for themselves. These numbers are very high because there's this 76% that says I'm very optimistic about the future. 85% believe they'll achieve the goals that they set out for themselves. And meanwhile, the general population, which is us, people who are not Gen Z, say, forget it, they're never going to achieve anything.
Okay, but who's right?
Well, we shall find out. I actually believe in Gen Z. I think that they want to know how to achieve. They want to learn more. I think they want a different future than we wanted, and that might be the source of some of the frustration. When the poll asked them, "What is your dream? What's your American dream?" They said something that's kind of, I think, a little bit startling to our generation. They said, "We want to make enough money to live comfortably." Now
this is really interesting because the goal of every generation should be to do better than your parents, but Gen Z just wants to be comfortable, which is where we're seeing the divide here.
On its face sounds like an okay goal. I want to make enough money to live comfortably. But when their word comfortably is not about financial security, it's about anxiety. If you look deeper into the results, right? They'll do anything to avoid anxiety. They want to have lives that are anxiety free. And that's why we saw quiet quitting, right, lazy girl jobs, fun employment, all of those trends.
And you think if this poll was taken of a generation or two back or three back, the answer would have been not just I want to be comfortable,
yes,
but I want to do better than my parents?
Yes, absolutely.
Because that to me was what I thought was the American dream.
That's right. They have a very tamped down, diminished American dream. And who's to say it's wrong? Maybe but what we see, what the implications for business are, is that they are moving away from work and business being the source of their happiness and self-actualization and identity.
I can't say I'm shocked or surprised. I mean, they grew up with the Great Recession, followed by COVID and the pandemic.
Okay, so the interesting there that is really interesting is, Becky says, well, they went through COVID, they went through all this type of stuff. So obviously they have a lot of anxiety. They want to be comfortable. But the researcher who works at NYU, she's a professor there, her argument was these guys are so afraid of being anxious. But on top of that, they want to start their own business, right? Because they're afraid of the anxiety they get from staying stagnant and static in their life with a boss. Well, if you're going to be anxious and have anxiety working at a company because you don't feel like your life is moving forward or you don't feel like you're doing anything for yourself, you don't really feel a sense of purpose at your job. The paradox to this, and I'm going through this right now, I have a startup, Audia.io, I'm building this YouTube channel, all this stuff, is the amount of anxiety you're going to have as an entrepreneur or trying to build something for your own where there's no rules, there's no job. It's you against the world. You've got to create something. You've got to monetize something. You've got to have some value. You got to convince people to believe in your ideas, all this type of stuff. That is more anxiety producing than anything. So there's a paradox with Gen Z, which is that they don't want the anxiety of working, which some people call lazy, and this research poll called anxiety producing. But they also don't want the anxiety of starting their own business or doing something on their own, because that's the general anxiety of having to take a risk in the world and have immense odds of failure and have the lack of stability that a job brings. And so it's a really interesting point that Gen Z is in right now. And a lot of that, I think, is going to impact where big tech companies and ultimately how companies decide what their employment process is to keep these people happy enough to work at those companies in the first place. Let's move on to an update from UBS Bank. Now, this was very interesting. I watched this interview in the morning. CEO Sergio Ermotti, they acquired Credit Suisse a couple of months ago when everything was collapsing. He gave a decent amount of insight into where he thinks the banking crisis is going, if it will be a crisis, and where he sees ultimately regional banks doing over the next couple of months.
FDIC issued a warning that the banking industry still faces major downside risks from inflation and high interest rates, which could erode profits and credit 6 months after that banking crisis. For a look at the state of banks and the state of the global economy, UBS's group's CEO, Sergio Armati, is here. He's the UBS just completed its $3 billion acquisition of rival Credit Suisse in June. Quite controversial at the time. I want to talk about that, the progress you've made. But I want to start with trying to understand where you think we really are. You have a unique perspective on the global economy, and given the different regions that you cover, where do you think we really are?
Well, the outlook for next year are not so good. So I think that we expect the global economy to go from around 2.8% to down to 2.5, with a risk on the downside as we speak. Most likely, the U.S. will manage to go on a softer basis, avoid recession at this stage. Europe is definitely under a lot of pressure. Inflation is still high, and there is no growth.
So real quick, he says U.S. likely is going to avoid a recession, kind of soft landing, but Europe's under pressure. One thing I forgot to mention as well, the European Central Bank increased interest rates by 25 basis points today, unexpectedly. There was no expectations of a rate hike, and at, I think, 8:30 in the morning, they put out a rate hike. So they're obviously struggling with inflation to be able to do something like that unexpected versus kind of where the United States is at.
And China is also somehow slowing down after a promising start post-COVID.
Does that mean you're pessimistic? That's not a roaring endorsement of where we are.
No, I mean, look, I don't think it's about being pessimistic. It's about being realistic at looking at not only macro data, but also the geopolitical front is not very constructive in that sense. So I think that one has to be realistic in looking at that. So the latest round of energy prices going up is not definitely helping inflation fights.
From the data you see, I mean, one of the big debates we have in the U.S., of course, is, do we have a soft landing or do we have a hard landing? Where do you land on that camp?
I would say that I'm still hopeful that we can go for a soft landing, but there's too much consensus around soft landing, and usually when there is too much consensus around something, we have to be prepared for something else.
So are you telling your team that this is not going to be a soft landing?
Well, we have to be prepared. Our job is to manage any scenario, and it's part of managing the tail risks. And
when you think about the tail risk, but now let's go to Europe, where I know you're also thinking it's going to be a tough road. What are the dominoes, therefore, to fall, if there are dominoes that do fall?
Well, look, for Europe, it's structurally is already a challenging situation, and an escalation of the geopolitical front between the U.S. and China would hit very hard the European economy. So I think that's first, that's the point. And second one is the inflation is still pretty high, stubbornly high. Now we will see what the ECB is going to do, but even if they don't hike, they're going to have to stay there for a little bit longer.
What do you think the impact of all of this is going to be on the banking industry writ large?
Well, look, at large, I think the banking industry is very strong in terms of its capital, particularly the very large banks around the globe have demonstrated that the solidity of their capital base. Our capital is up tenfold since the financial crisis in aggregate. The last round of regional banks crisis have demonstrated that banks, the large banks, were there to be a stability factor. But in general, of course, if you have a tough time on the economy, banks are going to be under pressure, both in terms of the credit exposures, but also in terms of profitability.
How should folks think about European banks? We can take UBS out of.
Okay, so he goes on to say that European banks obviously are going to have a little bit of a harder time than American banks. One thing in this interview that is not shown, and I wasn't able to send myself the clip. I was listening to it earlier in the gym this morning, and Andrew Ross Sorkin was like, so when you see other banks struggle, like Citigroup, they're doing a bunch of layoffs right now. How do you feel about them as the president of UBS? And he said, well, I don't have any schadenfreude on any of these banks. And as soon as he said that, the OG Market Open viewers are going to know what I thought. He said, well, I don't have any schadenfreude when I see these banks. And I was like, holy crap. He said the word. The word of the day 5 days ago, or I think 3 days ago, was schadenfreude, which means having pleasure in the misery of your opponents. And so the way he says, like, I didn't have any schadenfreude, and he said in a nice little European accent, I was like, oh, this word of the day shit is not a joke. It's real. People use these words. And so that was really awesome to see him actually say that stuff. Okay, last thing I want to talk about today is the Palantir AIP. Give a little bit of a preview. Before that, let's take one last look at the charts. We've got some stocks going up a little bit, some stocks going down, and then we'll talk about Palantir and end off the day. Tesla at 273, Apple at 174, S&P at 448, Palantir 1575, going down from 16, SoFi going down from 9 to 892. Robinhood is down almost 2% on it. Well, 1.18%, not that badly. Look, Robinhood, I've been very public about my opinions on Robinhood. I think it is absolutely undervalued. I think $10.50, $9. I think this is the price where DCAing in Robinhood, if you're interested in Robinhood, this is not a bad thing to do. $7 billion in cash, $3 billion for the brokerage. The brokerage is now GAAP profitable, innovative products, UK expansion. The pure valuation itself to me is a reason to look at this company. And then on top of that, the growth trajectory of what it can become and why it is becoming so central in people's lives. I mean, again, the big thing yesterday, the 400,000 users didn't use the app last month compared to the month before. And their options trading volume was up 1%, which means the people that are engaged, and they're not leaving the product for like if you're using Robinhood every day, you're using Robinhood. Like it's just, like there's no reason for you to go to E-Trade or JP Morgan or anything like that. So as long as they keep building that sticky base of consumers like me that get more excited to use Robinhood, I'm going to keep using Robinhood. Then you got, billions of dollars in the Roth IRA. There's just a lot of bull cases for Robinhood. So if you're interested, I mean, look, I think it warrants looking at it before you think of a DCA, but I am of the opinion that I do think Robinhood is undervalued. Palantir at $15.69. All right, let's get an update on what's going on with AIP. Let's talk about AIP. So at 11:45 today, I will be going live with Arnie, discussing what's going on in the world of Palantir's AIP. Now, if you guys missed this image yesterday, some of you guys might have seen it on my community post. Some of you might have seen it if you follow me on Twitter. If you are not following me on Twitter, links in the description. Please make sure to follow me there. Alex Karp and Elon Musk were sitting together yesterday at a conference in Washington, D.C., discussing AI regulation. So my caption here was, on the eve of Palantir's AIPCon, Alex Karp spent a few hours with Tesla CEO discussing AI regulation. Karp is now on a private flight, this was yesterday, to Palo Alto, preparing for his company's second conference in 6 months, highlighting the future of where AI will be implemented within the enterprise. This is a really big deal, in my opinion, because on one day, you're sitting with one of the most important men in the world, Elon Musk, discussing the future of AI regulation. On the second day, you're hosting your second conference in 6 months on a product that has only been out for about 3 months to the world about where the trajectory of growth can become. And you're a CEO that has, quite frankly, said, I don't even know if we feel comfortable selling some of these products to our clients because of how powerful this stuff is. This is a big deal. Today's AIP conference is a very, very big deal. And before I talk more about this, I also said, I think Karp and Elon could have sat next to anyone. For some reason, they chose each other, and they were laughing with each other as they were talking in some of the videos that we see. So, maybe it was prearranged seating, whatever, maybe tinfoil hat theory, but like, look, they could have sat next to Zucks, could have sat next to Satya Nadella. Why did they sit together? It's just coincidental that when you're making the seating chart, you put Karp and Elon together. Like, I don't know. It's a little coincidental. What would have been really funny is if they put Elon with Zucks and they started fighting and had their little fight that they were supposed to have a while ago. So it was really nice to see that. Now, if we go to Palantir's actual profile, this is a little preview video they put of AIPCon. And if you see it playing right here, there's no sound on it. These are some of the companies that are going to be presenting at this conference. So you got Fiserv, JD Power, Associated Materials, Cisco, Cone Health, CPKC, Ferrovio. This Ferrovio company, by the way, huge company, like incredibly important transportation company. Like a bunch of people DM me like they could not believe this company was using Palantir. Dish, Eaton, Sintra, Miller's Ale House, which is like an Applebee's restaurant competitor. So my expectations ultimately going into AIP is very simple. I just want to see the clients that are presenting today in the 6 presentations we get. All I care about, and I think all anyone should care about as a Palantir shareholder or as an enthusiast of AI, is do you see a use case in the 15 to 20 minute presentation that these clients give that makes you think, oh my God, if I was the CEO of that company, if I was an employee at that company, if I was the director of marketing or insurance at that company, I could see myself using this product, legitimately using it, not just like, like really using it on a day-to-day basis. And it would transform my productivity, my company's productivity, my efficiency, my operational workflows, and ultimately make the company more valuable. If we as consumers can see ourselves in that position using AIP, because that's the whole goal of AIP, to have non-subject matter or to have domain expertise, subject matter people that are not technical, that don't know how to do codes, that don't know coding, to be able to work and interact with these LLMs via AIP. If they can use it in a meaningful way, and we can easily see as consumers or as investors that this is where it will help employees, that's the bull case. And I think, it makes, in the context of Foundry, right? Why is Foundry important? It creates an ontology of your data, and then you're seeing how a company is more efficient because of their data. Basic example, Novartis CEO, right? One of the 4 largest pharmaceutical companies in the world, said the reason they're going to be able to enable AI into their company to be able to do massive amounts of drug discovery, which means more money for Novartis, is because they have an ontology of their data. They've set up everything to the point where they know how to enable themselves in the new modern generation when it comes to using AI to enable business intelligence and services and ultimately productivity. Today, we need to see that on steroids for the 6 companies that are presenting. And if we can see that on steroids, and we can really see these companies show use cases that are larger than what we could have imagined, which is what I thought at the last AIPCon. I mean, some of the stuff that JD Power and Cleveland Clinic were showing, obviously healthcare, I've covered it tremendously in terms of what Palantir can do. It's a big deal. And HCA Healthcare is one of the largest private healthcare insurance companies in the world. The fact that they're presenting on the main stage, that one is also going to be exciting to me as well. So that's what I'm expecting for AIPCon. I'm expecting Karp to talk about LLMs in an interesting way for the first 30 minutes. I'm expecting Shyam Sankar, the CEO, to give some updates on what they've been able to do. Maybe they give some business updates. I doubt they're going to give that many business updates. I think they're just going to talk about all the clients they've been able to shoot. And then those clients are just going to be able to talk about what they're doing with AIP. My final point from this is, ultimately, as investors, AIP needs to be monetized. What is AIP worth to an organization? The deal we saw yesterday with Babcock International, that's a $5 billion revenue per year company. That company using AIP, is that worth $5 million to them? Is that worth $2 million? Is that worth $2? Is that worth $10 million? And if it's worth $10 million and Palantir is going to get $10 million or $5 million from a lot of people in the next coming quarters because AIP is that valuable to them, that's going to be great for the company. But we need to see today if AIP is that monetizable, if there's enough value to be able to monetize. And if we see that, then I think AIP is going to do really well for Palantir, and ultimately the company will do really well as well. Jason, when does AIP start? 11:45. It's already on this channel. You can set the notification. 11:45 Eastern, 10:45 standard time. Yeah, and 8:45 a.m. Pacific time. And I'll be live. I'll be here with Arnie, and we'll be discussing everything with AIP. All right, that's it for me. Thank you, everybody, so much. 500 people for joining. For the people that joined at 8:45 a.m., I appreciate it. I'm going to be live starting 8:45. I love this. It's like a symphony conducting this market open. There's chapters for those that come later if you want to go back to different parts. I'm really enjoying doing the market open. I like it way better than 9:20 to 10 because I get a good 30 to 35 minutes to actually talk about different subjects that leads us into the market open. So I'm loving this. This is exciting. This is great. Thank you all for being here. It means the absolute world to me to see you guys and have you guys listen to my thoughts in the morning. And hopefully you're getting a lot of value, information, and hopefully entertainment from it. Oh, real quick. I always forget this. Word of the day. Let's quickly do that, and then I'll get you guys out of here. I don't know how I always forget the word of the day. Here we go. Okay. Word of the day is globular.
Globular.
This is a boring word, but spherical, globe-shaped. So hopefully Palantir's AIP product today shows how globular it really is in terms of being able to take not just the whole market, but the whole globe. I'll see you guys at 11:45. Bye, everyone. Thank you for joining. See you later.